What's up, Money Minds? Welcome back to Market Briefs Video Edition. Today is October 26th, and here's some business and financial news you can finally use. It was a mixed earnings report for Facebook. Facebook was the first big tech company to report earnings in this latest season. Here's how they did. Earnings per share was around $3.22 versus the $3.19 that were expected. Revenue was $29.01 billion versus the $29.57 billion that was expected. And finally, daily active users hit 1.93 billion versus the 1.93 billion that Wall Street expected. On top of that mixed earnings report, new whistleblower documents were released yesterday, putting even more pressure on the social media giant. In our October 25th market recap, it seems like it's raining just about everywhere in the United States right now, but the market stayed sunny on a gloomy Monday. With the main focus of this week being earnings, investors are optimistic after most reporters have had positive things to say about their companies. Of the 117 companies in the S&P 500 that have reported earnings to date, 84% posted numbers that beat expectations. In today's financial tip of the day, have you ever heard of a repeat customer? Unfortunately, all good things have to come to an end. On January 31st, 2022, you'll have to start paying back on your student loans again. And if you have student loans and are dreading the day that you have to start making those full payments again, our team wrote an article on how you can get ahead of your student loans in the best and most efficient way possible. And if you're interested in reading that article over on theminoritymindset.com, I will link it for you in the description below. In our first main story of the day today, we're talking all about inflation. But before we break all of this down, my name is Nate from Minority Mindset News, and if you like this video, smash that thumbs up button below and hit that little notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. It looks like hyperinflation might be coming a bit sooner than we thought. Twitter CEO Jack Dorsey and some economists have been talking about an upgraded form of inflation lately. But what the heck does that actually mean? Well, it's called hyperinflation, and hyperinflation is when inflation rises uncontrollably for a period of time. Hyperinflation is almost always associated with some type of stress to the government budget, and it typically happens during times of war or other crises. For once, looks like Dorsey might be speaking logically. Or just kidding, Jack. But it does make sense. Inflation, according to the Fed's most trusted gauges, has been rising for an extended period of time now. And yes, we are seeing prices increase and other shockwaves from inflation. What actually got us here though? Well, the government has been spending a crazy amount of money stimulating the economy since March of 2020. Eventually, we all knew that this would have an impact, and Dorsey, and frankly, many others, believe that it will keep getting worse. The world supply chain is still stressed in many different ways. This is not only contributing to rising prices, but it's hurting various industries. The US government also has to eventually deal with its debt problem. Policymakers extended the deadline until December so that the US doesn't go into default. If you look at Dorsey's tweet specifically, he thinks that hyperinflation is going to change everything. He said, it's going to change literally everything. And he was referring to hyperinflation. Next up in our second story, let's talk all about automotive and easing the pain for Hertz. Tesla was one of the biggest market movers in yesterday's trading session, and it didn't have much to do with its earnings. Tesla hit a $1 trillion market cap for the first time ever, and Hertz said it would buy 100,000 electric vehicles. Hertz filed for bankruptcy just over a year ago after demand for rental vehicles plummeted during the pandemic. The deal will bring in an estimated $4.2 billion for Tesla and is the largest ever purchase for electric vehicles. Tesla reported earnings last week and reported record revenue and profits. That is it for our main two stories of the day today. So let's take a quick break to talk about today's sponsor, Fundrise. Fundrise is the first simple, low-cost real estate investment platform. You can get paid in dividends every single quarter, and your money is invested into a portfolio of real estates across the country instead of just one place. All you have to do is fund your account and pick your investing goals. You can even start by investing as little as $500. And for whatever reason, if you're not happy with your investment within the first 90 days, Fundrise will buy it back from you, no questions asked. So if you want to get started investing in real estate with Fundrise and want to learn more about their historical returns and everything else that they offer, I will leave a link in the description below on exactly how you can find them. Big shout out to Fundrise for sponsoring this video, and now back to the news. Money Minds, have you heard of the crypto card? Mastercard just announced that soon any of its banks and merchants can start offering crypto services, ranging from Bitcoin wallets to crypto reward credit and debit cards. Mastercard is partnering with Bakkt, a crypto firm created from the Intercontinental Exchange, to add the crypto services. But like all things in the business and financial world, you're probably wondering, how does this affect me? Besides just Bitcoin and credit card rewards, the new deal also allows restaurants and merchants to offer rewards in Bitcoin rather than just traditional points. And customers will also be able to convert their existing traditional points into crypto. Mastercard has connections with over 20,000 financial institutions with 2.5 billion active Mastercards in the world, meaning this partnership may cause a massive influx in crypto usage since it's much simpler for customers to spend and earn crypto. Next up in our Pick Your Brain section, oops, never mind. It seemed like just last week when PayPal was very interested in acquiring Pinterest. But on second thought, PayPal said that it is not interested in pursuing Pinterest. It was all just market rumors, according to its CEO. Shares of PayPal jumped on the news. Next up is our Money Mind section, where we pull comments directly from you all on our Instagram, YouTube, and TikTok accounts. Today's comment comes from Caney Baby on our YouTube channel, and the comment reads, "Can someone explain to me why earnings reports are so important?" Oh, yeah, us, we can. The impact of earnings reports on investors can be massive. Depending on how well or poorly a company performed in the previous quarter, shareholders could reward them with a bump in price or sell off a stock by the boatload. If you want to learn more about earnings reports and exactly how they can affect your investments, our team wrote an article on this topic over on theminoritymindset.com, and I will link it for you in the description below. In today's My Break section, let's talk about the fast food frenzy. Restaurant Brands International, parent company of Tim Hortons, Burger King, and Popeyes, reported better than expected earnings hot off the grill. Here is the full breakdown. Net sales increased by almost 12%, bringing total revenue up to $1.5 billion, falling slightly short of the 1.52 predictions. Restaurant Brands claims recovery from the pandemic and the ongoing labor shortage led to low sales. Each store is struggling in some way due to the worker shortage. Popeyes had to close 40% of its locations' dining areas. Canada's slower recovery has lagged Tim Hortons' performance, forcing many locations to shorten hours of operations. And Burger King's same-store sales dropped by 1.6%. While the company is making many tweaks to its menus and deals to better appeal to high-margin customers, sales aren't expected to go fully back to normal until more employees can get behind the counters again. Money Minds, we are nearing the end of today's Market Briefs newsletter, but here's just a few more things to keep in mind. Twitter is expanding its features. It's working on a blockchain link tab that shows off NFT collections. Another thing to keep in mind this week is that the Russian group that hacked SolarWinds is still attacking computer networks. It has compromised 14 firms since May. In addition, the spiteful meme coin Shiba Inu hit an all-time high yesterday. It is up over 40% in the past week. And one last thing to keep in mind this week is that over a booming week last week, the SPAC that is linked to Trump's social media platform dropped about 10% yesterday. But that is it for today's business and financial news. Thank you so much for watching. If you like this video, don't forget to hit that subscribe button below. Keep hustling, Money Minds, and I'll see you all in the next one.